Central banks. How to stay ahead in the digital finance revolution.
We're going to be discussing how to stay ahead of the digital finance revolution. The main component is, of course, everything that relates to central bank digital currency. I'm your moderator today. My name is Torben Friis. I am the managing director of Liquidity. We are a market maker and help some companies here. And with me today, I have Domnic Mifsud, who is a public chartered accountant and also a scholar in the world of blockchain from the University of Malta. And I have Olegs Cernisevs, who is also a scholar in the world of blockchain and whatever comes along with that. As a matter of fact, a PhD. He's also the CTO of Blackcatcard, which is a financial institution. So, gentlemen, if I may ask you, first of all, how are central banks, in your opinion, going to establish central bank digital currencies? Because a lot of people, they say, well, there is stable coins and I can wire money from my bank to somebody else. Why do I suddenly need this? Domnic, please.
Well, digital currencies and peer-to-peer transfers are there. And the central bank already uses some sort of digital payments through Target 2. But I think that the threat posed by private cryptocurrencies made banks aware to research and introduce CBDCs. And that's what they are doing now. But I think at the end of the day, it's what people want and what trust is there in the public. If the public does not trust the government money, they will still go into private cryptocurrencies. And CBDCs at the moment, there are a lot of challenges for the central bank because, for example, how you say, the risk of blockchain itself and the cybersecurity threats, and they can limit the use of cryptocurrencies and trust among individuals. There are two types of CBDCs that can be introduced. One is wholesale CBDC among different central banks all over the world, which they trade between themselves, which is much more efficient than the current system. It's faster, it's cheaper, and there is the retail CBDC. And when it comes to retail CBDC, there's one major challenge, that is remuneration on retail CBDC, because if there is CBDC, there's a direct relationship between the individual and the central bank. And what about local banks? Will they removed from the equation? Because if people keep their money in their wallets, there will be less deposits in the banks. So the bank cannot lend to individuals, cannot increase business. And that's a huge challenge, I think, in my opinion.
So, Olegs, if we then look at the scientific side of that, and in general, how do you imagine that that's going to work between banks and central banks and the public?
Thank you very much. Okay, honestly saying, I believe there is two different stuff which should be saying. Currently, as Domnic said about the private individuals, absolutely true. But let's see from the perspective of the financial institution to financial institutions, since it will allow fast clearing, firstly. Secondly, what we currently limited, if we're speaking about SEPA, for example, we are limited to European Union and European Union's financial institutions. But in case if it's CBDC, we can, for example, easily create payments between different financial institutions all across the world. It's also very necessary stuff which we should admit. And this may facilitate all this settlement. And currently, when we are waiting, when the bank's making all this chain of the payments, we will be exactly receiving funds, and it may make all business faster, firstly. Secondly, if you're speaking about the private individuals, what we currently see, I doesn't believe that a lot of people will have their own cold wallets in their pocket. They still will be using financial institution, cryptocurrency exchanges based on the MiCA or someone else to have this cryptocurrency. And we still will have this deposits in different way, maybe in different way of regulation. But anyway, they will be the same place. And the part which will be using definitely the cold wallet with the crypto, I believe it will be more or less the same people who is currently holding cash. What will be with the cash after that? It's very interesting moment.
Because that was my next question, because currently you have a lot of people in the world of crypto who like the independence of governments, the independence of tracking as such. But if central banks are, let's say, the ultimate issuer, how do you then imagine that this is going to challenge the existing ecosystems? Because if we just take a step back and think about it, the presumed claim was that whoever Satoshi Nakamoto was a person who wanted to exactly establish independence from central banks. Domnic, please.
In fact, that's why Bitcoin was created, as you said. And that's another challenge by the central bank, because it's going to know what are your spending habits. What do you like? What do you don't like? So this privacy concept, the method that the CBDC has to be created has to be in a form of way that privacy is secured. Because if privacy is not secured, there will be less trust in the system and individual most likely will not use it.
So when you say privacy, what do you mean by that? Does it mean that it will still be a public blockchain technology where everybody can follow it? Or do you more imagine that it's going to be something that will be dialed down?
The government will follow you. The government will collect data.
But you don't believe that the blockchain data like we know today with Bitcoin, Ethereum will be public, that there will be a certain level of privacy layer that will prevent people from seeing what you're doing on your wallet related to CBDC, or how do you imagine that?
I think there is much more research to do to see if we can prevent from governments or from financial institutions to divulge information, get data from those transactions. At the moment, private cryptocurrency, is pseudonymous. So if no one knows that you are the owner of that wallet, you can't know what you are spending directly. But if the central bank knows that your wallet belongs to you, can know everything about you. Literally, all the data can be collected.
Olegs, your thoughts, please.
If we are speaking about that, definitely as a part of how to preserve that, let's return back to MiCA. MiCA is saying that if blockchain allow to understand who is holder of this wallet, then in this case you're using that. If not, then you should use another method how to identify that. Currently, there's only one, to ask customer who it is, who is sending your money, what is currently also happening. And I believe that such situation will preserve, that blockchain will not be holding this information. Since even from the perspective of the GDPR, can you imagine, the blockchain is open, therefore everyone
Sorry,
can know
when you say GDPR, you mean Global Data Protection Regulation, the EU privacy law.
Exactly,
Right.
exactly. Since if you're speaking about the blockchain, it's open. This means that anyone can go in, verify my personal data, understand what I'm spending, where and what. And therefore, from this perspective, I don't believe that a blockchain will become open. But definitely it will be easier to identify what you are doing, yes. But it will be necessary a very sophisticated system to adhere which wallet is belong to whom and what you are paying for, since blockchain also doesn't hold any description. And this is also part which is very, very tough.
So considering the whole topic around central banks and what we talked about before relating to Bitcoin and privacy and independence of governments, so to speak, inflating out of their debt by just issuing more money, how do you imagine that central banks practically are going to introduce this? Is there one day going to come a message saying, in addition to your regular bank account, you will now also receive a digital wallet, and this is then run on blockchain, because that will also enforce governments to actually explain their spending, right? Domnic.
I think the first thing to do from a central bank point of view is teach how to use crypto, how to use blockchain, what are the risks associated with it, what are the security, what are the advantages, because the individual needs to be with a peace of mind that his funds are safe. At the moment, the collapse of Terra Luna, the FTX bank run, it decreased this trust between individuals and blockchain. And it would be a very big challenge now to introduce it to the public and the common people around.
Olegs, how do you see that?
Yes, I would like to say that anyway, everything is based on the business case. Business case which is used by the companies, by the persons, by the central bank. And therefore, the current useful business case for the CBDC is absolutely obvious. It's definitely settlement between the financial institution. And I believe that it will be the first case which will be implemented. Then, based on expectation of the customers, if they will be happy to pay by CBDC, great, but I don't believe that. I don't believe that it will be fast. Let's do that. In this case, if it will appear a new product when the CBDC can be connected to card, to account, it will be easier to know and to work with, then yes, maybe will be some admirers who will be definitely use this technology from the private individuals. But for the business-to-business transactions, I believe, yes, CBDC is very good tool.
So going back to what I was asking before, don't you believe there's a potential contradiction here where governments via central bank digital currency will have to show, because you are minting digital currency like you are pressing physical money. You know, currently with fractional banking, the central bank go in and say, we need 10% more money in circulation electronically. Let's put a zero more in the system. Nobody's checking that apart from the statistics issued by the central banks. How do you imagine that's going to work? Because politicians might say, wait a minute, you as the central bank cannot go out and do this, because now we have to account to the public that we just spent $50 billion more than we planned last year. How do you imagine that, Domnic? Sorry, Olegs, please.
I believe in this case, definitely, it's not that the pressure which is happening. Look, like market is changing. Since if we speak, okay, let's see the Nordic countries, they almost live without cash. It's absolutely okay. You can even make a charity in a church electronically, in this case, and therefore it's working okay. Of course, if you're going south, then you see, okay, cash is used much more. And you can't simply say, no, you will not be doing that. Since, like my home country, Italy, they're saying, okay, let's block 200 euros and 500 euros, which will be very complicated to do. But it's not decrease the mass of the cash payments. It's still on the same level. They doesn't use it 200 and 500 euros for the circulation. That's it. But I believe that this digitalization of the businesses will going further. And then definitely it will not be necessary to have a cash. That's the thing.
Okay, Domnic.
I agree with Olegs. At the moment, if you want to send, for example, from a business point of view, business to business, from euro to dollar, you have to go through a corresponding bank. It might take 1 day, 2 days, 3 days with high fees. Using CBDC, this is cheaper, faster, instantly. So even if you are a manufacturing company, purchasing commodities, purchasing material, you just send the payment, they start manufacturing. Not they have to wait for the payment to be confirmed by the correspondent bank and the local bank. And that is one of the main advantages of cryptocurrencies and central CBDC. But still, I don't see a big difference between CBDC and privately issued stablecoins, apart from, of course, regulation and controlled by the government.
So let's take the example with the US government debt, which has exploded since the COVID pandemic. The question is, what if the public as such, let's say there are a lot of, Bitcoin gold bugs out there who believe that money as we know it will turn into toilet paper, and for that reason they want Bitcoin and alternative methods. Don't you think there's going to be some sort of a competition between these two systems? Let's say the private protocol issued crypto, and then on the other side, the government issued central bank digital currencies? Domnic.
Yeah, there will always be. And in fact, we see it. If you have stable coins and stake them or put them in a liquidity pool, they give you 10, 15%. Whilst the bank, okay, now it raised interest rates. But a few months ago, it was literally nothing, or negative interest rates. So you have to pay for your funds at the bank. So that would be the competition. It's more about who's giving the most interest.
Olegs, how do you imagine that going to work between the private and, let's say, the public networks against each other?
I absolutely agree with Domnic. I believe that definitely there's competition will continue. But from other perspective, it's good, since this make both systems strong. Definitely. Some problems which is there inside the system despite of the CBDC or the payment, they will be eliminated due to this competition. Therefore, I believe even in this case, the competition is great.
My only worry is that if people start to use more stable coins, more private currencies, bank will lose their power. And for the economy, you can't live without banks at the moment. So, on the other hand, are these decentralized financial protocols earning enough to sustain their interest rates?
I believe that it's not a question about the power, I mean about the banks. Since currently what we see, it's a segregation of the duties of financial institutions. Banks starting to be more focused on loans, all types of loans. Financial institutions starting to be focused on the payments. And currently we already see that different approaches. Look around, you see a lot of payment institutions and they have completely different approach like banks has. And I believe that segregation will simply continue next days.
So let me understand this, Olegs. So within your financial institution, how much pressure do you feel from your peers, competing colleague institutions, if you are entertaining crypto-related payments? Because everybody's saying that a lot of banks are being ordered by the central banks, do not touch this, and a lot of people are reading in the news that Binance is being cut off, this institution is being cut off. What are you seeing inside the industry about how central banks are handling this towards you as a financial institution?
If we're speaking about the central banks, they're mostly not affecting us from this perspective, what we see currently. Who is affecting? Our other market players. Since if I am a financial institution and try to open the corresponding account with the bank, firstly, it's a challenge. Secondly, they say, okay, but please, no cryptocurrency inside. I'm saying, what is cryptocurrency? I'm not working with that. But even if you are simply receiving funds from crypto exchangers, saying, guys, sorry, make a regulation, all this stuff. No, it's outside of our risk appetite. And therefore, it's not the central bank who is, the central bank currently very good accepting this point. Yes, they have rules, they're saying, okay, be aware of risk, etc. But the market players would like to avoid all these risks.
Okay, Domnic, we are close to running out of time. What are your thoughts?
Adding to what Oleg said, local banks and middle banks, they don't have the risk appetite for crypto transactions. The money they are making is enough for them, and I think that's why they are refusing. Apart from AML problems, documentation, and risk associated money laundering and financing of terrorism.
But talking about the money side of it, to the best of my understanding, settling of transactions in crypto based on blockchain is much cheaper than what you have in existing bank transfers today, because there is a quite expensive human element in terms of HR resources, etc. Compliance we talked about. As a closing question to both of you, very briefly, how do you imagine that being in the future with central bank digital currencies? Is that something that's going to drive costs down and bring banks on board, or how do you imagine that? Olegs?
I believe that definitely the cost will drop down, definitely. This is what I'm expecting.
Yeah, that is putting pressure on banks to lower their fees, of course. If they want to compete, they need to compete in business terms, so they have to reduce their costs. But then again, what about the interest rates they're giving on their deposits?
Okay, so let's get a closing number here for the audience. When do you believe the central bank digital currency for the Eurozone is going to be introduced and operating? Olegs, how many years?
Oh, it's very hard to say. Currently, we see the ECB simply said, okay, we're more or less ready. But they doesn't understand which blockchains they will be used. They doesn't understand how it will be worked, what will be APIs. They will be controlling that, or they will be using others. Currently, this is completely mystery.
Okay, Domnic,
I think they will leave all other players to see that this blockchain is totally flawless, then go on CBDC.
Fantastic. All right. Thank you very much for attending. Thank you to the
Thank you very
audience
much.
for being here.
Thank you.
And have a lovely Sigma AIBC.